Hi, I'm John Alesi, and welcome back. In this episode, I'll be talking about the biggest mistakes homebuyers make when buying a home. Coming right up. On this channel, we talk about getting the most out of your real estate experience, whether you're buying, selling, or investing. We do a lot of educational videos on this channel, just like this one, so if you're new here, consider subscribing. Well, let's jump right in. The number one biggest mistake people make when buying a new home is not getting pre-approved for a loan. Pre-qualification or pre-approval means you've spoken to a lender or mortgage professional and you've given them information such as your job, income, expenses, maybe your tax returns, and they've looked over your situation and have given you some sort of guidelines as to the price range of a home you can afford. People are always looking online at real estate sites, looking at the pretty pictures, only to find out that they can't afford what they've been looking at. It's just a waste of time to be doing all this searching if you don't know the price range you can afford. So get with your lender and find out your target price before you start looking and know exactly how much home you can buy. Number 2, shop for a loan. Home mortgages come in all kinds of sizes and flavors and from many different sources. Big box lenders such as Chase Bank, Wells Fargo, Bank of America are some obvious choices, but there are other choices as well. Consider mortgage brokers who typically work with 10 or 20 or even 50 different lenders and can work with you depending on your situation, whether you have solid gold credit or maybe you're a poor credit risk. Maybe you've had a bankruptcy or a foreclosure or other past credit difficulties. Many big box lenders won't even look at you if you have these bad marks on your credit. Also consider contacting your credit union if you belong to one or can join one. They usually lend their own money and have better rates than a commercial lender. Number 3, know your credit situation and FICO score before you talk to a lender. You may not be able to get your exact score, but you can get a good approximation of what it is. If you've had problems in the past with your credit or maybe your score seems low, you should talk with a credit repair specialist. You might be surprised that a paid-off collection account still appears on your credit report, or even an erroneous item from someone else's credit that's showing up on your report. You may only need some simple documentation to prove these are no longer part of your credit history. Number 4, not looking for a first-time buyer or a down payment assistance program. There are numerous programs available through cities, counties, states, the federal government that might help you make your down payment or could ease the burden of coming up with a lot of cash for a down payment. I've got a separate video on this channel that goes into specific detail on this topic, but you would be surprised at how many programs there are to get you down payment money and even a grant, which would be free money that doesn't have to be paid back. Number 5, not understanding closing costs. Closing costs are the fees that you will incur in addition to the purchase price of your home. Your realtor or closing agent will be able to help you calculate these costs, which would include things like escrow fees, attorney fees, documentation, loan origination fees, and other assorted costs that might be attached and need to be paid before the home can be purchased. Number 6, failing to negotiate terms with the seller. Did you know you can actually negotiate some of the fees and costs associated with buying your home? Sellers will sometimes help pay your closing costs or repair costs, or even what's called a rate buy-down. A rate buy-down is when money is paid to the mortgage company to lower the interest rate by 1/4 or 0.5%. Typically, this will cost 1% of the loan amount per 1/4% rate reduction, but there are times when a seller will help you and pay that money. Number 7, not getting and not understanding a home inspection. Home inspection companies are usually hired by the buyer to take a look at the house before the purchase is made. Many times, home inspectors will find problems with a home that should be addressed before the home is purchased. Once you get a home inspection, Go through it line by line and look at the items that are noted by the inspector. Sometimes these items are small repairs that can be made by the homeowner. Things like replacing an electrical cover plate or perhaps a deadbolt lock. Other items which might be safety related could be handled by you, the seller, or a qualified repair person. Other major items might include things like termite damage, cracks to the foundation, or repairs that need to be made to heating and air conditioning systems. Sellers could assist in paying some of these costs, but remember, they are not under any obligation. Homes are generally sold as is. Another aspect of the inspection report is the informational section. These are items that are included strictly as a reference for the new homeowner. For example, the inspector will note where the main water shutoff valve is located, where the electrical panel can be found, and where the gas shutoff is. Make sure you familiarize yourself with these items once you become the new homeowner. When the lights go out, it's good to know exactly where the breaker panel is located. Number 8, not reading the homeowner association documents or other deed restrictions on your new home. These can be overwhelming because HOA documents might be several hundred pages of rules and regulations and budgets. HOAs typically will have some restrictions on the usage of your property, which could include things like the color you can paint your house, the number, size, and breed of pets you're allowed to keep, if you can park in the driveway, your ability to rent the property in the future, and many others. Don't get blindsided by not looking at these items before you make a purchase. It would be unfortunate to buy a property with intentions of turning it into a rental, only to find out that you can't do it because the HOA restriction prohibits it. Number 9, and this is a big one. Don't make any changes to your finances or buy any major purchases before closing of your new home. Financial changes will have a huge impact on your ability to obtain a loan. Just know that loan underwriters will be checking your credit a day or two before the closing, so any major changes will show up on your credit report. This means no job changes, no large cash withdrawals from your checking, savings, or retirement accounts. And don't deposit any large amounts of cash into your bank. This will trigger an investigation and delay the closing. Also, don't make any major purchases while your home is under contract. This means that you cannot buy any new appliances, new furniture, or new car while you're in the closing process. Do not apply for any new credit accounts, even if they're offering something simple like a retail store credit account that gives you an extra 20% off of today's purchase. This will cause a change in your credit picture and a delay or possibly denial of your loan. So don't take out any new loans, which could adversely affect the purchase you're about to make. And number 10 is, do not try to time the market. I'm not saying that you shouldn't be aware of the ups and downs and fluctuations of the market, but do not adopt the attitude that you're going to wait until the absolute lowest point in the market to pull the trigger and make your purchase. It's nearly impossible to determine the bottom of the market, and it's only until after it's passed that you know you hit the bottom. Do your homework, talk to your financial advisors, and move forward quickly when you find a property that meets your needs and financial abilities. It's always great to look back and know that you got a great deal on a property, but it's nearly impossible to time the market. So those are my 10 mistakes that home buyers make when buying a home. If you like this video, give it a thumbs up and share it with your friends on social media. If you'd like to see more informational videos like this one, subscribe to my channel and you'll be notified when new content is posted. That's it for today, so take care and I'll see you on the next video. Bye-bye.